Hey everyone, Mortgage Nerd here. Today I want to go over what happens by the numbers when you do a forbearance. So let's look at a made-up case. Here we have someone that has a loan amount of $250,000 on a 30-year mortgage with 4% interest. Let's say you purchased in 2015, April, so you've had the mortgage for 5 years. You have 25 years left to go. So here we have the payments. We have different charts for different reasons. But really what I want to look at today for this purpose, for the forbearance, is let's say you stop paying for 12 months. Remember my whole rule on forbearance. It's only if you have to. If it's a choice between paying for food and paying your mortgage, go buy food, call the lender about the forbearance. Now, let's say you take 12 months off because look, you lost your job, you lost your business, you really need it. You have to do it. It's not a free lunch. Don't just do it to save money. It's not gonna work out that way. You're gonna spend more money in the long run. So let me show you how. Let me show you what I mean. Let's say you sell your house 10 years from now. So right here we have 10 years. You would normally have a balance of 196 owed, but really what you're gonna owe is you're gonna owe 203 because you took off 1 year of making payments. It's not free money, it's adding on to your loan amount. Now that you're paying interest on that money. Not only that, think about what happens to your escrow payments, your taxes and your insurance if you have them escrowed rolled into your payment. That has to be paid. So you're gonna have to come up with that money somehow. Don't think this is free money. Don't think that it's a free lunch like I like to say. It's between paying your mortgage and feeding your family. Feed your family, please. It's a rough time and people need this, but don't believe what's being said out there that, oh, you just don't have to make your payments. And of course you're gonna hear, well, you don't have to get approved for it. Hey, anyone can do it, right? Even if you're not hurting. No, don't do it unless you are hurting. So that's a little bit about the math behind it. I can go into deeper aspects of amortization. I really am a nerd with these types of things because did you know that the way an amortization schedule works, you do not pay off half your mortgage in 15 years if it's a 30-year mortgage, and half the time, no. It's more like 22 years. The first 7 years, you're paying so much interest and your principal is very little. So if you make extra payments, amortization, you knock down that interest and your principal is bigger. So by adding extra payments, you're changing the dynamic of each payment. Amortization is pretty cool, at least for a nerd like me. Phil Stevenson, Mortgage Nerd, thanks.